Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Verizon reported earnings before the market opened on Tuesday, and the results were a little bit mixed. So I want to dig into exactly what happened, where the company is seeing growth, where it's not, and then what it means for things like the dividend and for cash flow long term. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. Now, I want to dig into the high level numbers first. And this is the way that Verizon starts their presentation. You can see that they say that postpaid phone gross additions were up 5.3% year over year. Cash flow from operations were up to $8.3 billion, and broadband additions are 437,000. All three of these need a little bit of context. So I want to go into exactly what these mean. The first one, you can see here that consumer wireless is actually doing really poorly for Verizon. That is offset entirely by business wireless. But if you add together both of these segments, the company is actually losing postpaid subscribers in the most recent quarter. So that's the thing that I want to note here. Is prepaid net adds is also falling. So this is a level of weakness that we're seeing across the telecom industry, but it's hitting Verizon as well. The positive news is that broadband net additions are actually growing really nicely. This is the total number, 437,000 broadband additions in the quarter. The one that I think is the most important is this fixed wireless number here, 393,000 additions. That's significantly higher than a quarter ago and continues momentum. This is, they call this fixed wireless, but it's really 5G wireless. It's a box that plugs into your wall, and then you just get internet from your wireless service the same way you could if you were running like a smartphone hotspot. So I've been using this for about a year now, and it works really well. This is one of the reasons that I've been fairly bullish on Verizon stock. So overall, you can see here, this is a pretty mixed bag. There's some definite strength in broadband, but a lot of weakness, especially in that consumer side of the business. When we go down to revenue now, it's a little bit mixed here as well. You can see that overall revenue was down 1.9%, but that's not as bad as it seems. And the reason is this wireless equipment number is actually down about $700 million, whereas service revenue is flat. Total wireless service revenue is up 3%. So if you're familiar with Verizon's business model, they basically sell wireless equipment like smartphones at a loss. So for every dollar of revenue that they're generating from wireless equipment, they're actually losing cash flow. The reason that they would do that is that they have very high margins on the service side of the business. So as an investor, what you would like to see is hardware sales actually fall and service revenue rise. That's kind of what we're seeing here. Relatively small numbers in the low single digits, but we do like to see that total wireless service revenue is up for the quarter and is even up slightly quarter over quarter. From a cash flow perspective, again, the high level numbers were really strong. I'll get to those in just a second, but $8.3 billion in cash from operations. Capital expenditures were actually up slightly. They're continuing to invest in building out the 5G network. That investment is going to slow down pretty significantly over the next 2 years, but still at an elevated level. Their projection is it's going to be a little more like $4.5 billion per quarter in a couple years from now. Free cash flow, $2.3 billion, but you can see here that's not enough to cover the dividend. So actually quarter over quarter, total debt was up about $2 billion. So that's kind of the alarming number there. Just like some of it's just like AT&T, Verizon is kind of on that razor's edge with the dividend. And now I want to move over to the actual financial statements. And this is where you see the drop in wireless equipment revenue right here. So 9.1% drop to $5.8 billion for the quarter. But like I said before, wireless equipment is losing money. Despite that loss, Verizon lost about $700 million on its sale of wireless equipment. Services and other revenue was down slightly, but like I said, again, that's a very high margin business. Operating expenses only $7 billion compared to $27.2 billion in revenue there. So that's where we really want to see that growth. So SG&A and then depreciation expenses are up pretty significantly. Over time, we'd like to see those come down, but that's proving tough to do in a higher inflation environment. Here's a statement of cash flows, and you can see here that net income was up slightly. Depreciation was a little bit higher than it was a year ago. So from that perspective, there should be a little bit more cash flow coming into the business. But a huge part of the increase in cash flow is actually from this other net number. And this is kind of a catch-all for all kinds of weird things for Verizon. So legal settlements and costs, those are the kind of things that go into this number over time, and it can fluctuate, but this is not something that's going to be sustainable. And that's something that I want to highlight here. This makes the $8.3 billion in operating cash flow look higher this quarter, but it also made the $6.8 billion from a year ago look a little bit lower. So take this operating cash flow number with a bit of a grain of salt. There's some similar things down here on the investing activities side. Collateral repayments was a benefit of almost $400 million this year, whereas it was a cost of $300 million a year ago. So these are the kind of things where you need to dig into the numbers just a little bit to understand what's sustainable about cash flow and what's not. Overall, I would say this is a pretty mixed quarter for Verizon. The consumer business is obviously continues to be really weak. The business side of things continues to grow, but they're losing momentum there. And the one bright spot is that fixed wireless business or 5G wireless business. I think that could potentially be another growth driver for the company. But you don't want to have weakness in the other major segments of the business just to have growth in that fixed wireless side. So this is a stack that I continue to hold. I think telecom is going to be one of those expenses that we're just going to continue paying, and it's going to be very sticky over time. But it's proving to be harder and harder to make a lot of money. And I would like to see Verizon actually de-risk its business significantly by paying down debt and maybe even then cutting that dividend significantly so that it isn't such a risky business. It's going to be a little bit more flexible. But what did you think about the quarter for Verizon? Love to hear your thoughts in the comment section below. Don't forget to follow Rive Investing here on YouTube. Thanks for watching, everybody. I'll see you again next time.